thank the chair and the ranking member and our witnesses for being here. Mr. Vollmer, I recognize that China is taking advantage of our laws and without auditor inspections from the PCAOB might be putting audit client company assets at risk, which could hurt Main Street investors. I am concerned, however, that prohibiting trading in public companies is also a drastic measure, perhaps an overcorrection that would also adversely affect Main Street investors who might own shares of those companies, either directly or through mutual funds in their retirement accounts. What are the implications if trading prohibitions on hundreds of public companies were implemented?
If it were done at once, as the bill seems to propose, it would be quite disruptive to the marketplace. Current shareholders need some reasonable advance notice so they can try and sell out if there were to be a total flat ban. That's not the proposal in the bill.
Right.
The bill would allow trading to continue in the United States, Ranking Member Huizenga, not just abroad. They certainly might be able to trade abroad. We can't deal with that. But they could still be traded in the United States in the U.S. over-the-counter markets the way the bill is currently written. It would only prohibit exchange trading.
Well, and let me get it. So what happens to the exchange-traded funds, these ETFs, the mutual funds that own shares of those non-U.S. companies that would be delisted?
They would continue to trade, I think, reasonably well if it's a fairly high volume traded security.
Are there less drastic or disruptive alternatives, Mr. Vollmer, that would not be as harmful to the U.S. capital markets?
I think there are, and I propose two in my written statement. One quickly would be a case-by-case determination by the SEC, quite similar to a process the SEC uses today and over 100 times a year to stop trading when there's inadequate public information available, and that's called a Section 12J proceeding. And so the SEC could do that, and only minor changes are needed for current law. And then I proposed a more creative solution, which would be a bonding or insurance policy requirement.
I saw that. Mr. Vollmer, I'm also concerned about the decline in American IPOs over the last few decades and the growing trend of American companies opting for private capital as opposed to public markets. Meanwhile, China's IPO market produced over 1/3 of the world's IPOs in 2017, which makes the decline in American IPOs even, frankly, more troubling. Why should we find these trends concerning, sir?
Well, I agree that there are some quite concerning trends. I think we need more study about why the Chinese companies have been able to engage in frequent IPOs and we have a declining trend in the U.S. So I don't have an answer to that. But I agree with you, we need to do more work.
You know, what do you think if some of the biggest deterrents could be to companies going public?
There are many issues that scholars have identified, and I don't think that scholars have come to rest on any one. Regulatory burdens through the registration process are one. A second is that when you become a reporting company, you take on a whole series of very costly obligations.
Would any of the bills discussed in today's hearing create these kinds of additional requirements on American public companies, adding to their regulatory compliance costs?
I agree completely. Not every one of the bills today being considered, but many of them increase the costs of compliance, increase disclosure costs, and those all add to the cost of raising capital.
And these increased compliance costs for public companies deter private companies from going public. Is that correct?
I agree with that, yes.
How does a company going public not only benefit the economy in terms of jobs, but also in terms of Main Street investors in America?
There are lots of economic studies that have been done about the benefits to our society at large from IPOs, but mostly from almost all forms of capital raising. It leads to economic growth, new products.
I just don't want to see the constant decline, as we've seen now over decades and decades, as China and other actors move into this space. It's something that we have to really look at, and I think you're right, study in terms of the deterrent factors to private companies in the United States of America going public. So I thank you for your testimony. I yield back to the chair.